there, traders and investors. Bennett Tyndall with TradingAnalysis.com. It is Tuesday, December 8th, 2020. We're just around the corner from Christmas. We're just around the corner from the new year. We had an interesting move in the markets today. Drumroll, please. 3,700 cash session close in the S&P. Futures opened on Sunday with a positive move through 3,700. We had a 3,705 futures session print. Saw some consolidation yesterday, but now we're getting the print in the cash session. So if you guys have been following our work at Trading Analysis, you'll know that we've remained bullish. Our CEO and founder, Todd Gordon, stuck with his trades through the December pullback in 2018, through the March pullback this year, the COVID sell-off, as it's often referred to as. And well, the rest is history. The markets are pushing into new highs, and we're gearing up to possibly leave this expanding volatility pattern in the S&P behind us and turn it into yesterday's news. That's what I'm looking forward to in 2021. Before we get started into the hard right edge of the charts, special announcement. If you're not doing anything tomorrow morning, Wednesday, December 9th, 8:45 Eastern in the morning on Todd Gordon's YouTube channel, we have our TA Live Wednesday live stream show, which we host every week. We go from 8:45 through the 9:30 market open. And tomorrow, we actually have the honor of having special guest Mr. Jay Woods joining us. If you're not familiar with Jay Woods, he is a New York Stock Exchange designated market maker with IMC Financial Markets. He also served as the New York Stock Exchange executive floor governor. So very excited to have him on the stream. It's going to be a lot of fun. If you've ever been curious, what goes on the floor of the exchange when things get a little bit hectic and volatility is expanding, or maybe you're just curious to dive more into the mind of a market maker, please join us for tomorrow's stream. It's certainly going to be a lot of fun. And of course, if you can't watch the session live, you can always get it after the fact. I would encourage you guys to open up your web browser, type in go.tradinganalysis.com/live. You can get signed up for our mailing list so that you're always up to speed and up to date with what we're doing, knowing when we're going live, and of course, get notified for tomorrow morning's TA Live Wednesday show. So let's dive into it. I'm going to first take you to the Thinkorswim platform. And of course, Thinkorswim is our preferred broker. So let's jump into it. We're going to take a look at the S&P 500. We're looking at a weekly chart. So we're viewing price action back here through the January of 2018 high. Believe it or not many people understand this, but we've actually been in a period of correction since January of 2018 in most of the major U.S. market indexes. The only exception is the NASDAQ Composite as well as the NASDAQ 100. Those were the two indexes that did exit technical correction territory well before the Russell did. And then, of course, now we're looking at the Dow Jones and the S&P trying to break through those levels. So looking at this pattern, this is a period of expanding volatility. We have lower lows, we have higher highs, and the trend lines, which are sourced off of these extremes, continues to be respected. So dropping you off the weekly chart, we're going to take you down to a daily time frame, and you'll notice that going into September 2nd, the markets print a high, we run into resistance right off of that expanding trend line resistance. So it continues to remain in effect and is respected. We then consolidate and move higher in a mode of impulsive fashion. That took you into the November 9th highs, which was the day that Pfizer announced their coronavirus news and noted the fact that the vaccine was 90% effective in their trial patients. Very interesting session that we saw on November 9th. In the pre-market, when the news came out, we saw the stay-at-home, work-from-anywhere trade begin to unwind. Zoom took like a 20% haircut that morning in the pre-market. Simultaneously, we saw names that had been beaten down as a result of the economic shutdowns catch a bid. But then, taking a look what actually happened in the cash session here in the S&P, we opened at 35.83. As you can see in the upper left-hand corner of my screen, we have a low of 35.47, and we closed at 35.50, and that's off a high of 36.45. So again, we respect the expanding resistance trend line. We're now finally gearing up to leave this behind us and finally just maybe get us out of correction. So let's get into it. Let's dive down to the Motive Wave platform, and we're going to look at the markets through the lens of the Elliott wave theory, which you know is one of our preferred forms of technical analysis. So here you can see the expanding trendline resistance is represented in red. And I am viewing this move as post fourth wave and into a fifth wave extension, which has implications north of 38, shy of 4,000. But you'll notice I have outlined here for you a zone of fib extensions between 38.90 and 39.71. That's what we're viewing as our initial target zone. The secondary zone, if in fact we do press through that without seeing a larger corrective pullback, we'll be looking to our next upside fib extension zone, which takes you in through 4,300 in the S&P. You must think I'm crazy. I don't think so. I do think the markets are gearing up for what could be called the traditional Santa Claus rally. And from current levels, I do see a potential 7%, 8% rally here unfolding into the new year. At that point, once this 5-wave subdivision of blue wave 5 comes to completion, that then completes and closes out a wave 1 position of a higher degree. And then I do think we're in for a larger corrective pullback. Where that corrective pullback takes us is anybody's guess. Being a wave 2 position, it can take you to a variety of fib retracement levels. So let's get off the daily chart and let's show you some actionable takeaways that you can be looking for moving forward. So off the daily, down to a 195-minute half-day chart, zooming in on this price action, we are seeing some interesting coiling, which some are viewing as a contracting diagonal. This contracting diagonal has now invalidated, which is a bullish sign, and kind of closes the door on any suggestions that, or any interpretations that would suggest we're going to have an immediate move back down to 3,200. So I do anticipate a resolve higher. The current price action is a little bit choppy and hard to decipher, which is why the best course of action in this particular instance is to be awaiting a corrective pullback within this subdivision that resembles that of wave 2. Because remember, corrections of the same degree do often tend towards equality. So the minute we get some sort of a fourth wave correction that pulls back and squares up to this wave 2, that's when I'll start to get a little bit more cautious. And that's when I will begin to look for the new high that follows to result in the larger corrective pullback. So that's where we stand on the markets. Be sure to join us tomorrow morning for more insights. Thank you guys for tuning into this video. We'll catch you on the next one. Take care.